So Bitcoin mining. We're going to talk about the future of Bitcoin mining today. A little bit about myself. I'm an early Bitcoin adopter, investor, economist. I first learned, the first event that I attended was a conference in London, Bitcoin conference in London, early 2012. And it was interesting because the evening before the conference, there was a gathering in a Turkish restaurant in London. And there were some announcements made. Tony Galipi was there of BitPay, but there was also a gentleman representing a Bitcoin mining company, and he introduced the Bitcoin community to an entirely new concept, which was the concept of the pre-sale. And people were very excited. And that was actually one of the first Bitcoin mining companies that became bigger, and that's still around today. And so over a year after that, I was at the San Jose conference, which had 1,200 people and lots of angel investors, a couple of VCs. And it was interesting to see all the booths of the startups and all the people that were presenting their new ventures. And like from what I remember, almost half of them seemed to be like new Bitcoin exchanges, and there was also lots of Bitcoin wallet solutions, but very few mining companies or mining solutions. So that's where I saw an opportunity, and I got talking to some people that had a mining startup, and that turned out to be Cointerra. So that's a little bit of background how I got involved in Bitcoin mining. I don't have any hardware background, so it's still kind of very mysterious and magical even after that time. And I'm very honored and excited to be in the presence of a couple of true Bitcoin wizards, Bitcoin mining wizards. So let's jump right into it. I'm going to ask each panel member to introduce themselves and to also say a little bit about why they're excited to be involved in Bitcoin mining. Go ahead.
Hey, I'm Jez San, based in London, England. My background is computer games and online poker, but I'm also an investor in Bitcoin companies and in mining equipment. I'm agnostic in mining equipment. I have some KNC Jupiters. I have quite a lot of Hashfast Sierras. I have even more Cointerra, Terra miners, and even a couple of Bitfury systems.
And why are you excited about Bitcoin mining?
I'm excited because, well, actually, it's very complicated, Bitcoin mining, and trying to figure out the right time to buy in and the right pricing and the right technology and so on. I'm excited because it's a challenge and because it's a major part of the Bitcoin ecosystem, both from the decentralized nature, but also that you're investing in the network and you're investing in the technology that validates the transactions.
Thank you. Naveed?
Thank you. First of all, before I introduce myself, I would say it's a great honor to be along with Jez San here. I think he's being very humble. There are very few people who are OBEs in the world, and I think he's one of them. He has noted contributions to our field, so it's a great honor to have Jez on this panel. Thank you. And same thing I would say about Emmanuel, a very young entrepreneur. I'm very impressed with what he has done, and I think he'll introduce himself. So it's a great honor to be in presence of two such entrepreneurs here. For myself, I started my career as a professor, and my main expertise is in the area of chip design. I have done 320 chips in my life. Very few people alive who can say that. So I've done a lot of chips in my life, and many of them have been quite complex chips. And I think after that, I worked for a small company called Intel for a long time. And some of you might know that company. And there, again, I was involved with the large server design, so a lot of expertise. And then in the last 11 years, I started a company called Open Silicon. Open Silicon's goal was to really try to see if we can make chip design more predictable, low cost, and so on and so forth. So mostly around chip design. Why am I interested in Bitcoin mining? I think when I worked on supercomputers in early 80s, and that was a great thing to do. Then while I was at Intel, we worked on how we can increase the computing power of the chip. So that was a great run, how we went from 75 megahertz to gigahertz to multiple gigahertz, eventually to 6-7 gigahertz. So I think right now, from my perspective, I am looking for, and many of the people in the Silicon Valley are looking for a goal. something that we can build bigger and better systems. And actually, these microtransactions, currencies, Bitcoining, all this gives us an opportunity to bring out all these expertise that we have built in last 30 years to build these scalable and very large systems, which will be very low cost to operate, and so on and so forth. So I think I'm excited by the challenge of building these supercomputer-like things, distributed, but at the same time having great computing powers over the next few years, 5 years, 10 years. So I'm excited to be part of that revolution.
My name is Emmanuel Abiodun. I'm the CEO and founder of Cloudhashing.com. We're a Bitcoin mining service. What we do is make mining available to everybody with removing the jargon and just making it easy for everyone to gain access to mining without having to learn anything or having to plug in any hardware. So we've been very successful in the consumer base where we focus wholeheartedly on the consumer. A lot of the challenges were getting to understand how to get into the game of mining and the difficulties of picking the right hardware manufacturer. So we're the go-between, really. And we've been successful mainly because we've been able to mitigate a lot of the time risks or also supply-related risks involved in the mining process. My background was in software development. Prior to founding Cloudhashing, I was working at HSBC and also JP Morgan investment banks, built trading systems for credit derivatives, credit default swaps, you name it, and also risk management systems, complex systems for hedge funds and banks to manage the margin risk and also, guesstimate, would you say, their funding. So I'm very excited about Bitcoin mining. I mean, as a geek myself, it was very nerdy for me as I started off mining in my bedroom. Eventually, the wife kicked the computers out of the house, and I had to found a company to actually continue my passion in Bitcoin mining. Bitcoin mining as a whole is very interesting because it's a fundamental backbone to how Bitcoin operates. And I find that there's a lot of work involved, there's a lot of investment going into it, and rightfully so, because it's probably the most secure network for any form of payment processing you'd ever find. And that's why I'm excited to be in this new space.
Thanks. Yeah, the sector is really developing at a breakneck speed. I think, correct me if I'm wrong, but I think there's only one Bitcoin mining company around that was there 1 year ago. All the other players are completely new. So related to that, I was wondering whether you could comment a little bit about the challenges in the Bitcoin mining industry today, like security. Emmanuel touched on it, the background in risk management, so security, financial risk management, maybe intellectual property, any legal risk that you're thinking about?
Yeah, if I may. It's crazy because Bitcoin mining, you're almost really a bank. You're, in a sense, manufacturing money on a day-to-day basis. And if you're operating such an enterprise, you need to almost have systems that are geared to a bank, as it were. So, for example, this year, Cloudhashing expects to mine close to $100 million worth of coins. So to handle that kind of volume, we have KPMG who manage our auditing and ensuring that we account things properly. And at the same time, we have legal firms, top legal firms, who ensure our contracts are correct and conducive with consumers. The risks that you have to manage is your staff being able to have the right procedures in place to ensure that they're sending the right funds, and also ensuring that you're not susceptible to hacking. We've had a lot of reports about websites being hacked, Bitcoins being stolen on exchanges, true or untrue, people run away with money or not, but you still need to have adequate security measures in place. You have to run it as you were running a bank, as it were. And a lot of our investments goes to ensuring security, ensuring ease of use at the same time, and also maintaining that we have a standard that is conducive or even similar to an investment bank or to a mainstream bank, really. And that's a challenge in itself.
Naveed, any comments on challenges?
In legal challenges or challenges in general? I think the biggest challenge we would face is that as we go from sort of an appliance-based mining system that we have to a data center-based mining, that is what I think is the future. How does this transition happen? And for example, I think as we try to build these bigger appliances, if they consume 2, 3, 4 kilowatts, I think it would be very dangerous to have those kind of things in anybody's homes and things like that. So naturally, there would be a transition to data center. Now, as we go from 40 petahash to 100 petahash to 200 petahash system, I don't think we have really fully comprehended all the things that we have to in place to make these large-scale systems happen. I mean, how would we power these things? I mean, are we just going to linearly scale? That is too expensive, right? How would we maintain these systems? So maintainability, graceful degradation, powering up, powering down, all of these, both software and hardware challenges, I think we are at the very infancy of building those data centers. Now, but the good thing is we can learn from people like Google, we can learn from people like Amazon, people, Facebook, they have built these kind of centers. And so I think what we need to do is not really completely invent something new, learn from them, and build these highly maintainable, highly upgradable, highly safe data centers, which are very cheap to set up and low cost to operate. So I think, to me, it's a very virgin territory and a lot of things to learn, but at the same time, a lot of challenges.
Jez, anything you want to add?
I agree with my two colleagues over here. I think that the short-term challenges are to do with people like me that are buying Bitcoin mining equipment. The disconnect between when you order it, when you're expecting it, and when it arrives, and the disconnect in does it do what it was supposed to do, those kinds of things are the biggest challenge because to date, most people have been disappointed either with the delivery date or the performance that they expected out of their hardware. And trying to plan ahead and trying to do your return on investment forecast is very difficult in those situations.
Right, right. It looks like the cloud hashing market is trying to bridge that gap.
Yeah, we let them take the risk.
Yeah, I mean, I'd probably add to what the vote said, really. I mean, we manage over 1,600 computers, and we expect that to be close to 3,000 this year. Now, that is mind-boggling. I mean, the deals we have with data centers now, they just can't believe that someone dealing with funny money or some infant currency is taking up so much space and so much power. So those structural challenges or even infrastructure challenges have to be dealt with, and you're going to need new type of equipment. We can't be dealing on a per box basis. We're going to need systems that are fully customized and easier to manage. As Jez was mentioning, there is a massive disconnect between when you order your equipment and when you receive them, and that's the kind of challenge that we've been taking head on as Cloudhashing. We remove a lot of the risks that customers are dealing with regards to delivery of equipment, so customers don't have to deal with that. Now, and I do believe as the market matures and you get more mature hardware manufacturers or people with more experience in the Cisco side or more experience with the Intels, AMDs, kind of like what you've seen with the Cointeras and what the guys at HighBitcoin are doing, you start to get a more mature, as that maturity enters the market, you start to see a lot of supply chain issues that manufacturers are dealing with subside, and you'd be able to predict your deployment cycles, which is crucial to determining your return on investment.
Thanks. So we've been talking a lot about economies of scale and how that's an industrialization of the industry. Bitcoin mining seems to have moved for a large part already from the basement and the bedroom towards the cloud. And that brings up a lot of questions in the Bitcoin community because they argue that the Bitcoin protocol is aimed to be this decentralized ecosystem. So what would your response be to that tension between the decentralized, let's say, nature or goal of the Bitcoin technology, and on the other hand, what seems to be an increased centralization in some of the mining solutions?
I think currently most of the mining that's done today, even though there are only a few mining pools, the owners of the mining hardware get to choose where they're mining. They get to choose which pools, and so they can vote with their feet if they don't like the policies of the mining pool that they're on. And there are still plenty of pools, albeit it's dominated by a few big ones. Most, even though, for instance, I don't actually mine at home. Actually, I do have one miner at home, but most of my mining is done in hosted data centers. And even in those cases, most of the mining equipment that I run, I can choose on each individual basis which pool each system is mining on. And so I still think it's relatively decentralized, even though the professionals are now hosting it. That doesn't mean that the amateurs that actually own the equipment can't choose where to put it or where it mines to.
Right, you don't necessarily give away control.
No, you're not giving away control, but you're just hosting it in a more professional place.
Right, right.
Yeah, I totally agree with Jess. I think just because we are building bigger and bigger machines, it doesn't mean that individuals will not be able to own a piece of it, control a piece of it. In fact, on the contrary, I think that we can do a lot more than they could do with individual ownership. See, when you own an appliance, although you can physically have it, but you may not have known much about it. With the new systems that we are building, you can know each and every ASIC, what it is doing. You can change the frequency, you can change the power, you can turn it up, you can turn it down. You could find out temperature of each and every piece. So you could be sitting millions of miles away from your equipment and you will know more about it than when you had it in your basement. So in fact, what we are trying to do now is to build systems in which you will have more control than you had before. You had more knowledge and you could operate it more, whichever way, optimum way you want to run it. So I don't think we are trying to take away the control or the distributed nature of it. I think we are just trying to make sure the equipment that is built is hosted in a safe environment. It is built at a very low cost. It operates at a very low cost. And then it is upgradable and maintainable. I think that is the nature of the development, not in terms of taking control away from individuals.
And would that control then be independently verifiable by, say, third parties, or?
I think so. I absolutely think that. I think as we are building this system, people will have transparency is the most important thing. That an individual should be able to verify that this particular board, this particular chip, this particular subsystem is working for me, and what is the output of that system, and that should be verifiable by each individual.
Any more comments, Emmanuel?
Yeah, I'd say a large proponent of the Bitcoin mining right now is done, because the return on investment is relatively quite quick in comparison to other investments. Now, there will come a time where the ROI window will be pushed out further out, maybe into the 9 months, to the year and a half. And at that point, it's going to be large enterprise companies dealing with mining or investing in mining, where the individual might not be as incentivized to invest into Bitcoin mining. Now, at that point, we can really run into a danger of, okay, hold on, who is exactly investing in Bitcoin mining? Who's controlling these pools of hardware, doing transactions, and who's assessing what fees should be charged? But I do believe with better systems that give you control and more transparency, then really you're gonna do better than what we're actually doing now, where we don't really have as much transparency with a lot of the other pools of where they're going. Really.
Okay. I'm going to roll over into my last question. If there's people in the audience that have questions or are thinking about it, write it down maybe if you want a chance to ask a question later. We'll do that in a moment. So my last question is, where do you see Bitcoin mining evolve between now and 9 months from now, which is the end of the year? Where do you think we'll be?
I think that the big question is obviously, will people carry on mining at home? Will they move to the data center? And I agree with the others that inevitably it's moving to the data center, but that doesn't mean that it's enterprise ownership. I mean, obviously there will be large-scale mines out there, but I still think that individuals do want to buy and own their own equipment, but they don't necessarily need to have it at home. I mean, some people would love to watch it do its thing, but they're not very pretty machines, and some of them are a bit noisy, and they put out a lot of heat, and in some countries that might not be desirable. So the best place for them probably isn't the home. And as they require more and more power and more performance, they're going to need to be more professionally managed.
Right. You've been looking at the entire space for a while. Do you see big changes coming up in terms of consolidations, mergers and acquisitions? How do you think that's going to evolve?
The good news is that there's a lot of technology companies out there making silicon for Bitcoin mining. So, no one would worry that there's one company that dominates. There's lots of companies, and they're all at each other's throats trying to compete for the best, the fastest, the most lower power, the cheapest, whatever. So that's great that there's so much competition, and that gives choice to users. And also, some choices are better for home users than other users. Like there's little Antminer machines that are very inexpensive and not that big. They're not that powerful either, but they're more ideal in a home where you don't want a noisy, large box. But there are other boxes that are very powerful and and do a completely different job.
Do you see a lot of new companies on the horizon?
Yeah, I think that every day you read about new companies, albeit some of them are scamming companies. It's quite amusing seeing some of the elaborate scams that go on. But even then, some of the companies that you thought were scam companies turn out to be real.
Right.
So.
Exciting.
I think
Naveed, any comments on
Sure.
the next 9 months in mining?
I think the next 9 months are going to be very exciting, first of all. I think we are going to see a transformation. I think if you look at the first generation equipment, the idea was you use it and then you throw it, right? We can't afford to do that with the data center. We have these racks and there's a lot of investment in it. And so I think you would see evolution of systems that are upgradable. So it's not like you take a rack and then you're done with it, they throw it and then you roll in a no rack. You are not going to do that. You did that with appliances. So I think what you see is, first of all the new systems will be completely upgradable. Secondly, I think they will be completely virtualized. You cannot be watching 3,000 or 30,000 servers and sitting there. And I think data centers are not going to be close to anybody's home. So I think the next thing would be virtualization. So by virtualization, what I mean is that ability to control, observe at a distance, and be able to provision it at a remote location. And there are apps which are doing that. And the third thing is, I believe that the quest for lowest power and the lowest cost per gigahash has just started. I see a lot of new companies have jumped in now, and I think that this is only going to heat up. I think a lot of the low power experts have not quite there, and I think now they're jumping in. So you will see definitely by the end of the year several announcements with very low power, low OpEx and low CapEx system. So I am actually quite excited. I think in terms of hardware, overall system, we should see a significant improvement.
To add to what Naveed just said, in the past, the quest to have the best mining technology was always about the fastest and how many gigahashes they can provide for the dollar. But now there's more to it than that. There's also the running cost, which is the power consumption, which is the deployment cost and so on. So there are a lot of factors that make it competitive, and no, it is an interesting time.
So I'll give you one example too. So for example, if you're building an appliance, you might think that if I can run it the fastest, that is the best you can do. Actually, when we are designing our data center, we found out that is not the case. In fact, our chips don't run at any speed. Like they literally run at half the speed of the fastest miner, and that is the most optimum design for a data center. So the thought process will change, I think. How you design an individual appliance is not how you design a data center, which is supposed to be running at 4 or 5 megawatts and supplying a lot of gigahash power. So.
Yeah, I probably have to agree with both of my colleagues here. That it's now going to be a quest to find the lowest cost of ownership. CapEx and OpEx, pretty much. It needs to be better than what we're doing now. And also fully upgradable systems is key, especially reducing overall cost of ownership. And maintainability, ease of scalability, things like that have to be dealt with. And the hardware we have now is great for generation 1 miners, I'd call it. Then the next generation is going to be closer to what you see with the Googles, with the Amazons, with the rack spaces. It needs to be on that kind of scale, because of the amount of power we're using right now, we're talking about using multiple megawatts. I think there was some analysis done recently as to how much power the Bitcoin network is actually utilizing, and it's mind-boggling. I know what we're using, and we're using some of the most advanced technology available today, and the old generation equipment is using 3 to 4 times more power. So only God knows how much power is actually being utilized. So I think there's a lot of work that's going to be done in the next 9 months on the cost per gigahash basis, but also the OpEx, CapEx overall, to reduce those costs going forward.
Right.
And that's a big interest to a company like ourselves in maintaining profitability.
Actually, if you just move from appliance to a data center point of view, you save a lot of power, because each appliance is actually over-provisioned in terms of power. And so this, kind of over-provisioning of power at each appliance adds up when you're trying to put this, 2,000 or 3,000. So if you already start that I'm going to design these blade servers, which will not be individually powered, but they will be powered in a data center, you already save 30–35% power right there. So this mindset changes. And if you are not designing appliances and designing data centers, there will be savings will come, because Google and Amazon and Facebook, they've already done that. I mean, we don't, as I said earlier, we don't have to start from scratch. There's a lot of learning there.
Also, the concept of a data center is changing, because currently most of the Bitcoin mining equipment is going into existing data centers, which have redundant power and redundant HVAC and all that kind of stuff. And that's all overhead that we don't need in Bitcoin mining. We already have redundancy just inherently in the network. So, the idea of a data center for Bitcoin mining is completely different and could be significantly lower power and lower cost.
Right.
As some people in the audience have proven. Hi, Dave.
As a final follow-up before we continue to the audience questions, we haven't touched on geography at all. Do you see any, like the next year, do you see any shifts in terms of like the places where the actual mining happens? Are we going to see a move closer to very cheap energy sources that are maybe not ideal for traditional data centers, but could be suitable for mining, Bitcoin mining data centers?
I think Emmanuel has traveled all over the world. I don't think there is any person who has any cheap power has not talked to him or he has not an agreement with. So I think he is an authority on power now all over the world.
Tell us all about it.
Yeah, I mean, we've talked to almost everybody regarding power. I mean, you're going to see people migrate to where power is cheap, reliable, so that's key.
Right.
Because you don't want to pay for redundant power, but you also don't want power going out non-stop as well. And at the same time, you want relatively low real estate prices, because what you're paying at a data center is the price of power and also the real estate. So the two factors are key there. And believe it or not, there are very cheap places in North America where you can host. In Washington State, for example. Iceland, where we have a lot of our equipment as well, is relatively cheap. And you've also got places we host in Texas as well, because Texas has got a very strong infrastructure for power. But yeah, it's always going to be migrating towards the cheapest, most efficient, cheapest and most reliable power sources. That's where the miners are going to go, and also where you can get real estate for a relatively cheap price.
Like KNC is building a massive data center in northern Sweden, in Boden, and there's the big data center in Iceland.
I guess a lot of hydroelectric power.
Anywhere where power is cheap and ideally renewable is perfect. So Iceland has geothermal, and Sweden has hydro and geothermal. So
exactly.
Definitely. But also there are other geopolitical reasons why mining might move, because it might. Right now, the guidance in America is that mining is fine, and you don't need to file to be a money transmitter to do mining. But that guidance could change at any point, and so we might one day not wish to be mining in America. We might want to mine somewhere where the laws are compatible with mining.
So I believe IRS said today that they will tax mining, right? So the mining income will be taxed. So
there's a major disincentive already.
So already disincentive
today
is there. So if your mining equipment is in Iceland, then you can deal with whichever you want to deal with it. But if it is in US, then you definitely, as a miner, I believe it is out today. IRS has a new, and
in practice, obviously you'd have to subtract your costs.
Oh, yeah, certainly, of
your
course.
investment, and a lot of mining is break even at best right now.
So then, obviously, then you don't have to pay any tax on it.
Well, admittedly, I mean, this is one of the reasons why we have disparate geographic locations where we're based as well, for political reasons as well. If the Icelandic government decides to ban mining, or the US government decides to ban mining, we have alternate locations
or
for
even
operation.
just to tax it. I mean,
exactly.
For any reason.
For any reason whatsoever.
Or even security as well, because if you've got all these expensive piece of equipment hosted somewhere, that's a target for thieves or hackers. So you might want some kind of geo-security as well.
Yeah.
Questions from the audience? Is there somebody with a microphone going around? Maybe that gentleman?
Thank you. I had a question on economics. I have a friend who spent $300 on a mining rig, and he was expecting to make big bucks, and he ended up making $1 a day by joining a mining pool. And then he calculated, okay, well, maybe I'll break even in a year, but in a year, his $300 investment in that equipment may be totally obsolete and almost worthless.
Your friend had incorrect expectations.
So my question is, what is the economics of mining? Isn't it a giant game of chicken and high risk? Because the Bitcoin price, in December was $1,000. It's 500 and change now. It could be $250. So you're not sure what the price of Bitcoin is. And the other biggest thing is you're not sure what the other guy's going to do. Because if a big player gets into into the mining game, then it's essentially his hardware competing against your hardware, and if he wants to outspend you, then it's a game of chicken as to whether you want to outspend him and have this escalating arms race, or whether everybody's going to operate at a break even, or because if lots of people drop out, then you can make lots of money. But if lots of people go in, then you make no money or lose money. So how do you think about the economics of mining?
Clear enough. The economics
all of
of
those
mining?
are true, and they're all risk factors. The price of Bitcoin is actually very important to the return on investment calculation. And the way I think about it is when the Bitcoin price is low, I buy Bitcoins. And when the Bitcoin price is high, I buy mining equipment. Correct. And it's not always the best time to buy mining equipment.
It's the same in the traditional mining sector. It's not always the best time to invest in copper mining or in gold mining. It doesn't mean that there's no value to the sector.
But to talk about recent history, when the number of petahashes on the network was low, when it was like sub 1 petahash and now, or even single-digit petahashes, the network size was doubling every month, practically sometimes even more. And so it became a terrible return on investment calculation, and it never looked good. But now that the network is so large, it's 30-something, 38 petahashes today, and it's been hovering between 38 and 42. Now for it to double in size in a month is actually almost impossible. Yeah. There's just not that much hardware being made, and there's also not that many customers buying it. So now the return on investment calculation is a lot more straightforward because the network growth over the next year, each month, is going to be significantly less than it was in the last year, each month.
And I'd add to that the major factor to return on investment, or diminishing return, should I say, in mining, was lack of delivery of hardware. There are a lot of people who paid for hardware a year ago, still haven't received it, so of course you're not going to make any money. So that was a major, it's a major deciding factor for a lot of people to get out of the mining business because it just was very difficult to predict.
Your friend that bought the $300 mining product thought he'd probably get it a week after he ordered it, and he probably got it 6 months after he ordered it because it was from a very unreliable company.
And had he got it a week after,
yeah,
he would have made money.
He would have made money.
Absolutely.
Yeah, absolutely.
Yeah. I mean, for example, we have a lot of customers who spend $1,000, or customers who spend $1 million in mining. And it's a massive, broad range of customers that come to us to help them get involved in mining. We get them online the same day they make a payment. So these guys are actually making a return on investment. Removing that risk of time is paramount to reducing their risk. It's actually, right now, it's actually more profitable. It's actually less risky to mine now than it was probably 6 months ago when hardware was coming on constantly. You were always being hammered. Your returns was always being diminished on a day-to-day basis. So because the network being at 40 petahash, for us to get to 50 petahash or 60 petahash, you're talking about multiple megawatts of deployment, which is near on impossible. And also, you're also expecting manufacturers like KNC or Cointerra or whoever it may be to double their workforce on a month-to-month basis, which is impossible in its sense. So right now, with a rate of growth of networks was close to 4% previously. Now we're below 1.5% per day, and we do see that continuously to go down over time because the requirement of it's a lot of big numbers. You can't just keep throwing big numbers at things constantly. Something has to give, and I think we're seeing that now with a slower rate of growth of the network.
That's the final follow-up because I want to move on to some other questions. But the question is, what kind of rate of return on investment are you getting
is reasonable now?
Is reasonable now?
If you were to buy some equipment today, you would want to find the equipment price so that you could return on investment, so you could break even on the hardware cost in 2 months, maybe 3 months. That you wouldn't buy anything that took longer than that because of the risk factors involved.
Correct.
Okay. Another question?
So the total number of Bitcoins is 21 million, and that's going to be a more scarce resource. So isn't the goal to get to 21 million quick so that you can now charge more transaction fees and profit later? Or is that not true at all?
Yeah, that's not
the Bitcoin network is designed in a way to release X number of coins, a consistent number of coins every day. So we're not going to get to 21 million quickly. The algorithm is designed to make the problem of mining much more difficult every 9 or I can't remember how many difficult changes.
So it's a race between the complexity of the algorithm and the speed of the chips.
No, the network is self-leveling. So every 2,000 blocks, each block is 25 Bitcoins. Every 2,016 blocks, it reevaluates how fast the previous amount of blocks were generated and changes the difficulty to make the next ones that much harder. So it self-balances itself, and it tries to keep it to a relatively predictable rate. In practice, We have been pushing out Bitcoin slightly faster than originally intended, but it's not going to speed up the final 21 million by that much.
Yeah, the inflation rate is pretty much predetermined.
Yeah. So it's still going to be like 20 years before the last Bitcoin is, or more before the last Bitcoin comes.
Hello?
Next question?
So I have a question related to decentralization of mining, sort of like small home miners. Like earlier you mentioned the Antminer, and I have an Antminer USB that I use to mine at home. And I think that's been going pretty well, and I'm wondering if, would you recommend to a friend that they do mining on a small scale at home? And for example, for me, it's not a profit motive. I think it's cool just to participate in the network. And then in addition to that, my apartment only has electric heating, so I kind of think of it as a heater as well.
I think that most home mining, particularly the low-cost mining like the USB miners and even like Antminer's 180 gigahash watt, I think that they're for hobbyists. They're like for people that want to be a part of the network and who want to mine to say they're mining. I don't think they're going to make money, and especially, in a USB miner's case, you're ignoring the power that the computer generates or that the computer is utilizing, and you're just calculating how much the USB is generating. And it's not actually a profit. It's not a profitable venture doing that. So you're doing that because it's a hobby and because you want to be a part of the network. You'd need much more professional equipment that spends much more of its percentage of power requirement on the actual mining and much less on the overhead.
I mean, there are two factors, right? How efficient that equipment is, and the data center equipment will be a lot more efficient in using the power. Second, you may or may not realize, in California at least, if you look at your power bill, you can be paying anywhere between 15 cents to 39 cents.
Yeah.
And these guys depend on 6 cents, 8 cents kind of numbers.
2 cents in Washington.
2 cents.
2 cents.
1.9, is it?
It's 1.9, some 2 cents.
So yeah, there's no chance.
So there's no chance you can make money with any large-scale mining at home. Yeah, if you want to have it, and I have one in my office, it's good to have one. It's a small one. It's a fun thing to discuss, but obviously you cannot make any money using that one.
Next question? We're probably down to the last 2 questions.
This question
maybe given we're down to about 3 minutes, so maybe if just one of you could respond.
Okay, yeah. This question is for Emmanuel. So I think from what I heard, the innovation comes from the hardware design, the data center design, and the power control. So why do you want to, I think it seems like you already attained that competitive advantage. So why do you want to just, share it with the consumer? I mean, what is the motivation behind the business model?
Sure. I'll tell you how the business started in the first place. I started in January last year mining on GPUs, using one GPU to mine, made it 2, then eventually bought another computer within 2 weeks. It was alarming for the family because they weren't able to come over to stay in a house because the spare room was sitting with 2 computers with the windows open permanently. So I was incentivized to buy equipment to store in data centers because it made sense, because that's the only place I had storage. And it just kind of spiraled into a case where people were interested in mining. So I offered them a service where they could release a portion of a computer for themselves and launched the Cloudhashing website in April. And what we've been doing is essentially enabling users access to mining very cheap, well, relatively cheaply, and also very quickly compared to buying equipment. So I've not had venture funding come into the business. We've not had VCs throw loads of capital. It's really just economies of scale. So if I could sell the mining contract for less than what it would cost me to, less than what I'd mine with it over a 12-month period and sell it to the customer, I can essentially give them the benefit of mining and have extra capital to deploy and reinvest in new hardware. That's how we've grown. It's all been organic. So I'm incentivized to actually enable people to mine. One, because it grows the adoption rate of Bitcoin. More than 60% of our customers didn't have a clue about Bitcoin before they came to Cloudhashing. So we're actually responsible. A lot of customers get involved in Bitcoin in the first place. So I think that's a winning battle. The other portion of it is we're giving people a service that they need. The fact that they can gain access to mining, where there are a lot of shady businesses out there who will not deliver or who have no real unction to even want to give you a product and just walk away with your money. So we do reduce a lot of the risks from that perspective.
We'll have to leave it at that, I'm sorry. This has been most enlightening. Thanks so much for very, very knowledgeable panelists. Please give it up.